Hey traders, let's take a moment to thank and feature one of our top sponsors, FX2 Funding. If you're looking to get funded, listen up. FX2 is offering traders the chance to trade with up to $200,000 in simulated capital and receive up to 85% of their results. If you're interested in getting started, use the link being dropped in the chat or the link down in the description below. If you pass the evaluation, you'll receive your feedback and gain access to your new account. FX2 allows traders access to a wide range of assets and allows traders to hold their trades over the weekend. FX2 is giving A1 Trading Show fans 15% off the evaluation fee if you use promo code A1Trading15. So if you'd like to learn more, again, use the link being dropped in the chat or the link down in the description below and use code A1Trading15 at checkout for a discount on any of their evaluations. Now back to the show.
Good morning, everybody. Welcome back to the live stream. Thank you for being here on what could be the most important day of the month when it comes to markets. Well, actually, if you're talking January, I would say yes, today's probably the most important day of news and market outlook that we are going to get. In February, of course, we also have NFP in 2 days, but in terms of January, today is a massive, massive day. And I'll get into all of it. We've got a very, very busy schedule today. If you're a regular, I know a lot of you guys join these streams right as we kickstart for the day. So I appreciate you being here early. I do want to say we will be streaming a second time today at 1:30 Eastern US time. So this should be a real interesting day. But again, 1:30, we will be prepping together for the press conference with Jerome Powell this afternoon, which is expected to have very, very high volatility for financial markets. We'll be discussing all of it. We'll be getting ready together, game planning, all sorts of good stuff. So let's start out with where we are at today. If you're an index trader, I got some really, really important stuff for you. Last night, we heard from two of the really big players in the stock market. We heard earnings report from, we had an earnings report from Microsoft as well as Google. Okay. So if you're wondering what caused the NASDAQ to go crazy at the end of the day, then let me introduce to you a little fun concept called earnings season. When it comes to stock market stuff, even if you don't trade individual stocks, if you trade indices, you should very well be aware of earnings season. Okay. So last night we had reports from Microsoft and from Google. And here's the crazy thing. Look at this, guys. Both moved down dramatically after hours, causing the NASDAQ and the S&P 500 to slip with it, especially the NASDAQ, which is comprised of tech-heavy companies. This is a classic example. You guys ready for this? This is a classic example of when traders who don't fully understand fundamentals will say fundamentals don't work. They'll say, look, Nick, Microsoft, Google, they had great earnings. So why did the market go down? It's just another example of why fundamentals are worthless, right? Absolutely wrong. The reason is because it's these stocks, when you talk about companies like Google and Microsoft, these are the cream of the crop. The expectations are so high for these companies. And so even if there's just a slight miss in guidance, in YouTube, in Google's example, YouTube was a slight disappointment in some ways. In Microsoft, it was pretty mixed and the stock didn't move all that much. But my point is Google was down like 5%. I'm not sure where it is as we speak. But the point that I'm trying to get at is fundamentals absolutely do matter. And these companies are priced so richly, and same with the NASDAQ as a whole, right? If you look at the NASDAQ, it's had a historically very high relative to itself valuation when you look at stock earnings. My point with getting into all of this is that even though the earnings were, better than expected in some ways, the outlook going forward was a little less optimal compared to what Wall Street was thinking. Okay. So here's the thing. That's why the NASDAQ sold off. So before anybody says, well, look, earnings were good and they sold off, fundamentals are crap, then you miss the point, right? It's all about forward-looking stuff, not just the numbers, but rather what does it entail for the future, right? So if companies are richly valued and Wall Street's a little shaky as to those valuations, perhaps there's a repricing on the NASDAQ pullback, right? Hopefully that makes sense. I know a lot of you guys don't trade indices, but it's very important that you understand that impact in the markets. They were the most volatile area in the last 24 hours, I would say. The dollar index, gold, these things are just kind of range bound right now as they await what Jerome Powell has to say. And in 10 minutes, we do have key information as well. We've got ADP, employment change. Okay, so what is that? Why does that matter to us? Again, this is the channel for trying to keep us up to date on fundamentals. So let's try and stay on topic here, right? With that, ADP, non-farm employment change, did come out at 107K. I'm sorry, what I meant is that in 10 minutes, we have the employment cost index. So we got numbers here, slightly less than expected. Well, that is less than expected in terms of employment change. However, the ADP number, I will say this, the market may not react too tremendously to this one because it's been really inaccurate at forecasting what NFP will say on Friday. So again, we do have some volatility here this morning. Let's go take a look at things and see how the reaction is. We have a slight sell-off in the dollar index, which would make sense. Cooling labor data is generally going to cause the dollar to sink in value. So we see that going on. But again, remember, guys, we've been in the same camp here for a while with the dollar. It's range bound. We're waiting for it to make a decision. So dollar index not moving too much. Let's have a look at gold here real quick, see what's going on with our gold chart. And I am short gold, by the way. I've sold gold at 2033. Not such a great start, but again, my thought process on this is I am bearish on gold unless we break through the highs. If we break through the highs, I'll go ahead and stop out. It's a very small position for me, as I do expect volatility due to the press conference later today. What I'm looking for out of the press conference in terms of keeping my bearish bias on gold alive would be that interest rate cuts are not coming as soon as perhaps the market is hoping for, right? If we see that be the case, if we see from, or we hear from Jerome Powell that, rate cuts are perhaps going to get pushed back due to the strong economic data, most likely what that would lead is a sell-off in gold. And that's what I think will happen. But I've also been transparent. Let me say this and reiterate this again, because I'm going to get the comments no matter what. If I'm wrong about this, I will be the first one to admit, okay, if the Fed's looking to rate cut in March, I need to quickly change my tune, change my game plan, and react to the market. Okay. So why I'm saying that is because a lot of times I'll have like an idea about something. I'll have a setup about something, and then I won't kind of, sorry, I just got a phone call. I just want to make sure it wasn't anything crazy. I'll get a lot of comments of people saying like, Nick, look, you were wrong. I can be wrong. Absolutely. But again, my risk is contained here. So if price does shoot up on gold, I will be out. It's a really small position for me, and we'll watch that close. Taking a look here also at some currency crosses just as we get closer to the afternoon here. The euro dollar is trading off of its lows, off of this ADP number, which is kind of interesting. So we'll keep a close eye on the euro, but this one has been so choppy recently. I don't know if you guys have been trading this one at all or looking at it, but it's just been such a range-bound market, finding support around the 1.081, and can't seem to find its bearings either direction. So yeah, you're not a trader, you just get YouTube money. I've said this before, but speaking very candidly, YouTube ad revenue pays just about enough for me to employ someone to do the work that goes into this channel. So the money that I make from YouTube ad revenue is not that great. If you do want to criticize me, you could point out that the software company that I have, A1 Trading, we make money selling software. So we do absolutely provide tools to traders, and I am as transparent about that as I possibly can. We make money both from trading and from the tools that we build and sell to traders. We have a team of 10 people here at A1, and we work really hard to create the best possible tools, just like a TradingView.com. It's like the TradingView owner, right? He's probably trading and also sells TradingView software. So there is nothing wrong with being entrepreneurial and having multiple sources of income. And if you disagree with it, then, maybe you shouldn't be on YouTube. What are you watching YouTube for? Anyways, continuing on, we have some movement here this morning, but I want to point something out, okay? When we get closer to this event, I do expect, and Kenzo yesterday, if you were watching the show, he made a really great point. big moves right now are likely to kind of not last too much because you do still have the big kind of main event coming, right? So yeah, I have some haters today. Yeah, I'm not even reading the chat, so I'm trying to keep up with the haters, but I can't even see them, like, because I'm moving too quick today. I got too much stuff to get through. Who cares? Doesn't matter. At the end of the day, if you find value in my channel, then awesome. If you don't, then respectfully, I invite you to unsubscribe and move on with your day, and have a great one at that. YouTube money. No, honestly, guys. So you can, if you want to know, I've actually posted videos of how much I make on YouTube ad revenue. And the actual answer, genuinely 100%, I make $0 because the team behind the scenes here, I have 2 editors on my team, wonderful talent that makes these videos possible. In terms of strictly ad revenue, I make no money. In fact, I lose money on what I pay to have these videos and stuff made. Where we do make money and where we're able to sustain what we do is through software sales. There's no question that we make plenty of money from what we sell here because unequivocally, we offer great value to the trading community. We have a lot of people who use our software, and we have a lot of people who work really hard to make the software as good as it is. So yeah. Anyways, speaking of software, I do want to take a look at some things here. Retail positioning might be worth looking at ahead of this big news event. So you have things like the Australian dollar, the Kiwi dollar, these things still very bearish. And if we look at those charts, I thought this was interesting. Let me see if I can switch over to our main view. I appreciate you guys in the chat who are supporting me. Don't even worry about it. Guys, I've been on YouTube since 2018. I've had a couple haters come and go. Most of the time, they just, you know, they're people who are frustrated with trading. I get it. It's hard. There's angry people in the trading community because when you lose a lot of money, it hurts. It's not fun, right? Where was I going with that? AUD USD. Yes. So you just always have to take it with a grain of salt. There's hurt people out there. They're upset about something, and they see somebody on YouTube, you know, making videos, making content. They don't like it. I mean, granted, I never get that. I think that they say that without realizing how many hours of work. I mean, I'm working a full-time, well, way more than full-time. I work like 10 hours a day, all day, every day, to put out what we put out on this channel. And so do my wonderful team members. Okay, so the Australian dollar, I want to show you guys this. We're still range bound, but markets are interesting right now because you can see retail traders overall, contrarian view here is to be bearish because retail traders are 71% long. Lots of retail pressure to be buying on these currency crosses, which I think is interesting. And you have the Kiwi dollar at the very same time at 63%. So we do see from retail trader side, we have some pretty heavy pressure on the buy side of these currency pairs, which makes me very interested when we go back again, we take a look at like the Australian dollar against the US dollar. It's in this range bound market. What that would tell me is that if this thing breaks to the downside, you may actually get some momentum picking up. And the reason for that is you got to think, you know, not to get too conspiratorial. I don't even think that's a word, but you got to think there's probably lots of stop losses here. A lot of retail traders who could be on margin, who could blow accounts, and not just retail traders. You know, that applies to both retail and institutional money who may bail on, you know, attempts to be long if we do break these lows. But the same story could be said for the most part on the upside. If we do break out, you know, there's probably plenty of liquidity there as well. And again, I don't get too far into that trading because I think that that's kind of, you know, not necessarily relevant compared to fundamentals, which I think will help you a little bit more in direction, but it's something to at least consider. Let's see. Appreciate you guys. You guys are giving too much love. You know, it's almost like if I ever need a confidence boost, can someone just come hate on me? And then you guys are just too kind. Thank you for all the support. Appreciate you. I promise I'm fine. Trust me when I say it's not my first rodeo on this YouTube thing. There's nasty people no matter what you do. But genuinely, we've got work to do. Let's forget the haters. Let's move on. Okay, so U.S. oil not going well for me. Not going bad, just not going great. I've been in this trade for several days now, And price came down, price came up. We're still kind of range bound. I think this one is probably going to be listening to what we hear from, what we hear from Jerome Powell. But at the end of the day, I think what will really be impactful to the oil trade is NFP. Because if the labor market is strong, it increases the demand for oil. Point blank period. If you have strong employment in the US, in Europe, in China, if you see the economy, oh, by the way, sorry, we have breaking news. I totally missed that. I'm sorry, I missed it. Let's just not miss later on today. That'll be more important. However, we do have employment cost index, so 0.9% coming out compared to 1%. You can see it didn't clearly move the markets that much. Yeah, so GDP came out for Canada hotter than expected. Employment cost index came out 0.9%. For those of you who do not know what the employment cost index is, it's the change in the price businesses and the government pay for civilian labor. Quarter over quarter came down 0.9% compared to 1%. It didn't come down. It grew by 0.9% compared to the forecast of 1%. It's a leading indicator of consumer inflation. When businesses pay more for labor, the higher costs are usually passed on to the consumer. So cool. And in terms of the US dollar, let's just have a look at that. Make sure I didn't miss any big moves. Yeah, not a huge spike either direction. 15-minute chart this morning does look a little bit bleak. You did have some sell-off, and yeah. Not the hugest news, but again, later on today, we get huge stuff. And I do want to say, we will be streaming this event. If you missed the opening statements in this live show today, we have a huge event this afternoon. We'll be live at 1:30 Eastern. I'm joined by Chris Pulver, who is a money manager, somebody who's been in the educational world for trading for a long time. I'm really excited to have him on the show again, and it should be a great time. Again, to react to the Fed funds rate, which is expected to hold at current rates, but more importantly is the statement and press conference, which will give us guidance as to what the Fed may be likely to do as early as March. So, yeah. I did miss the news. I'm sorry, guys. But this one, to be honest, was the minor one. This was not really... usually, I don't miss the really big ones because I know they're just how important they are. This one, not as likely to move the markets as... today's funds rate and press conference really is the big one. So yeah, dollar index still coming down here. Taking a look at the indices. Again, I mentioned this earlier. We had some not really disappointing earnings. We could take a quick look at the culprits here. Google stock was down huge. Take a look at this. The platform we are all using right now, YouTube, was actually slightly disappointing. But this is earnings season. When you get earnings season, you get some high volatility in stocks. I mean, Google's doing just fine overall, but this pullback is pretty substantial. Am I buying the pullback? No. I don't usually buy individual stocks. However, I do really like Microsoft. And I sold a put on Microsoft yesterday, which, as you can imagine, is a high-risk trade. But it was a very small position for me, and I sold puts at 370 ahead of earnings, saying if price pulls back tremendously, I'll buy the stock. Those puts are very much less. They lost a lot of their value very quickly because, again, the earnings, the market knows earnings are coming, right? So they price puts very expensively. Puts are bearish bets, calls are bullish bets. If you don't trade options, then I'm not going to try and explain options very quickly because they are they're probably the more complicated thing, financial instrument to trade, I suppose. But anyways, let's keep pushing on. Take a quick look at the S&P 500, which did lose some value overnight here and testing support. And you guys know, if you've been watching me, I'm really watching the indices close. But what has me a little sketch is check this out. Price came down to support and barreled right through it. So this key level here, again, not holding tells me that we very well could, if we see a less dovish Jerome Powell today, if we get a press conference that is a little bit more on the dovish side, there is that possibility that you see the NASDAQ come down harder, right? And that could bring us down to like 17,000, at which point I think there may be some buys, right? You've got, pull back on this chart. that would be, I'm going to guess that this is a 50% retracement. Yeah, just about a 50% retracement from this swing low to swing high. I am a NASDAQ bull. I'd like to buy the big tech companies, but I'd like to wait for at least a pullback before I try and buy. Do you mean hawkish? I actually do mean less dovish. The Fed pivoted at the end of last year. They went from hawkish to dovish, talking about rate hikes and how hard they're going to go. They stopped that. Now they're talking about rate cuts. What I mean by this, and this is, it's a minor point, but it's also an important one to think about. Okay. The Fed is dovish right now. I think that's a fair statement to say. We're talking about rate cuts. They're not hawkish anymore, but the question today, are we going to get dovish, like we're cutting rates in March kind of thing? Or are we going to get less dovish, meaning we still think we're going to rate cut, but it might not be until later this year? That would be less dovish, right? So it's kind of like a spectrum, but it does, I know it's antics, but it kind of matters when you're thinking about it, because we're no longer in the hawkish phase where the market is not expecting rate hikes at all. If rate hikes come back into swing, get ready for everything to flip upside down. The NASDAQ would drop like crazy. The dollar index would be back to the highs real quick. I mean, we'd be talking about something different. How do you go about using the top setups page? Well, currently, I don't know what's going on with the Edge Finder. I think we might be doing some maintenance behind the scenes, but I got to check what's going on. We might have some, I just need to refresh it. But how do I use the top setups page? What I look for is I look for confirmations both on the technical as well as the fundamental via Edge Finder setups. Okay, cool. We're back. I just had to refresh it. So check this out. I'll show you exactly how I use the top setups page. Click the top setups page. That's open up the Edge Finder, click the top setups page. Here's what you do. I go over here to bias and I take out the neutrals. I like to take out the neutrals. Some people like to keep them in just so they can look at their favorite assets. If you trade if you're somebody who trades currencies, right? Just select currencies. Now your watch list is 4 things to look at if you're trying to consult with the Edge Finder as to what, the bullish or bearish readings are looking like. If you don't know what you're looking at here, if you're a newer viewer, check this out. The top setups algorithm, our software pulls in all of this data: COT, bank forecast, retail positioning, smart money indicator, AAII investor sentiment, put call ratios, seasonality, economic growth, labor statistics, inflation, interest rates. It's pulling in all of this data automatically, or automagically, as I like to say, because the work that has gone into getting all this data in one spot has been immense and very impressive in terms of what our team has been able to do. The point I'm trying to get at, check this out. So we pull all that data in, and that's great. That's a lot of stuff to go through though. How about we just have an algorithm that goes through, pulls all that data in, and then calculates bullish or bearish readings based on each category. So for example, the COT data that we have, the latest filing, in terms of looking at the USD JPY, the Edge Finder has calculated that COT very much favors the dollar over the Japanese yen, and hence is giving a +3 score to the currency pair USD JPY. Now, that's one category. You've also got retail sentiment, seasonality, trend, economy factors like GDP, PMIs, and retail sales, inflation statistics, labor market statistics, and interest rates. The Edge Finder is taking in all of this data and computing using its internal algorithm. Like if you hear me and you hear me like talk through these points, Frank and I, the other gentleman who comes on the stream and a long-term close friend of mine who also works at my company, we've spent countless hours computing, factoring in, thinking through, and building this algorithm to essentially calculate bullish or bearish readings for various currency pairs, commodities, indices, etc. We have them all on here. So if we go back here, check this out. I've added the full list. So how do I actually use it? Well, pretty much I keep a look at this far left 3 columns and I say, well, here's some currency pairs, some commodities, and some indices that are very bullish, bearish, very bearish. Okay. Super simple. So now what do I do with that very bullish reading, you might be asking? Do you just go buy or sell them? Not quite, but I will usually take what I see here as a reading to go look at setups. So for example, let's do dollar yen. So dollar yen is getting a bullish reading from the Edge Finder, a +5 score. That's pretty good, showing us that we're getting some good confirmations to be overall bullish on the pair. So then let's go take a look at dollar yen. And now we can take a look at the technical chart. Okay, so now we go back to a straight old technical analysis that you, me, your brother, your mother, everybody knows this. Technical stuff is way easier, in my opinion, and I've been pretty vocal about this. Technicals are easier than fundamentals by a mile and a half and a trillion more miles after that. Okay, so technicals are support zones, trend lines, moving averages, Bollinger Bands. There's many great technical strategies that you can add. The point is, adding fundamentals to the mix gives you the why behind where the markets are going, right? We talk about this often. This is something that I did not coin. I actually got it from a gentleman named Josh Brown on CNBC that I really like listening to. Fundamentals are your why, okay? Fundamentals tell you whether you should be bullish or bearish a market and where the direction is likely to head, right? But technical analysis actually tells you when to get into a move, right? Most traders, they're trading with no why. They're just like, when do I get in? When do I get out? When do I get in? When do I get out? They have no reasoning to know why they're buying or selling something. And to me, that's crazy. Like, I need to understand, what am I putting my money in or taking a position on? Like, I need to understand fundamentally why I am in a move. Why do I think the dollar yen is going to go higher? Well, maybe the US economic data is looking real strong and they could keep rates steady for some time. And perhaps that tells me that on a breakout, fundamentally, I like the picture here a little bit better. So maybe we come back later today and perhaps the dollar yen is breaking out of resistance and we say, okay, maybe some breakout retest. If that breakdown was helpful to you or it made sense, if you already knew it, let me know just by typing yes in the chat. If that resonated with you, if that breakdown of how we use and we combine fundamentals with the Edge Finder and technicals with, of course, TradingView's charts to create better trading setups, if that made sense to you, type yes in the chat real quick. Just let me know. I'm asking you that because it helps me as the lecturer or whatever. It helps me know that this actually resonated and that made sense and I can move on from it. Okay, cool. Lots of yeses. Thank you guys for that. So yeah, I mean, it's trying to keep things simple by using software. Fundamentals are not simple. Let me be very transparent about the fact that fundamentals are not simple at all. They're very complex. However, using software to do some of the heavy lifting, meaning, okay, seasonally, we expect pound Aussie to move up in the month of January. Okay, factor that in, Edge Finder. Do that part for me. I don't want to go dig through that and get my pen and paper out and check. You could do the stuff manually because I used to, and it would take me hours compared to having software just find setups, print them out for me. Okay, let me go find technical setups, right? If that makes sense, then that's awesome. Cool. We're getting a lot of yeses. I also do want to say today is a huge day. We have the FOMC event. We have NFP Friday. And just to round out my point, if you're somebody who's looking at this and you're like, okay, wow, the tool looks awesome, then transparently, I want to let you know about our sales pitch that we've got going on. Okay. I'm not hiding behind what this is. If you see value in the product that we are offering, we work very, very hard to keep it up to speed and to continuously improve it. If you've been watching the show for a while, if you've been thinking about getting a copy of the Edge Finder, I want to transparently say that we are restructuring our pricing this year for the Edge Finder, and currently it is 45% off. We're throwing out a huge flash sale discount to give people a chance to buy the product before it goes up in price. And I'm not, I'm being as transparent as I possibly can about that. This is a sales pitch. I'm telling you, it is a wonderful product that we've worked tremendously hard, and we transparently are raising the prices. I'm not trying to pull any games. I'm not trying to deceive anyone. Transparently, it's a wonderful product. I use it every day in my trading, and so do many, many thousands of other people. So if you'd like a copy, here's how you can get your 45% off. If you'd like to lock that in, click the link here. We're going to drop it in the chat for you. If you click this link, you will be connected to someone on our staff at A1. I have several people on my team who can help you out with this. So here is the link. It's in the chat right now. If you're watching this back at a later point, It'll be in the description below. When you click that link, it'll take you to a chat now feature. All you have to do to lock in the flash sale before it ends is click Edgefinder 45% off flash sale into your name and email, and you'll be directly connected with someone on my staff who can set you up with a discounted copy before that sale price ends. Okay? So there you go. Now I can breathe a sigh of relief and get done with my pitch. So there is my pitch. I call it what it is, and I try and stay real with you guys. And if you appreciate it, then again, genuinely, I think it's a great product, and I use it every day, and I think you should too. If you're looking to use fundamentals, it is the product genuinely that I dreamed of because we built it, right? Like it's a dream to have a tool like that helps you source so much data in one spot, because fundamentals otherwise are so unapproachable. Genuinely, I think the reason the Edgefinder has been such a success overall for the traders who use it and for our company to be in existence is because it bridges the gap between people who are looking to use fundamentals but think it's too hard to approach and actually getting down into the data pretty quick and easy. Any thoughts on oil? Yeah, let's get back to the charts. I apologize for the rant. It is a topic I am obviously pretty passionate about. US oil, I am in a long trade on oil. Let's see where I'm at with this. So I've got oil open. So here's my oil trade. It's a small trade currently floating in the negative, and my gold trade is also currently floating in the negative as well. But yeah, we're watching gold and oil here today. I am bullish on gold. I'm sorry, bullish on oil, bearish on gold. You might be asking, how does that work? How can you be bullish on one and bearish on the other? And I will show you, okay? So let me see if I can pull this up. Okay. So I wrote ahead of that because I saw people who were going to probably ask that question. For those wondering why I might be long oil and short gold at the same time. First of all, it kind of hedges geopolitical risk, because if both rise in price due to elevated concerns, what do I mean by geopolitical risk? I'm talking about the Middle East. I'm talking about Ukraine and Russia. I'm talking about Taiwan and China. All three of those have potential to bubble over into geopolitical risk, right? I mean, they already are geopolitical risks, but they have the possibility of escalating. And in the case that something does significantly escalate, gold and oil probably will both go up. So in some cases, one trade will go well, the other trade will go poorly. The second reason, so that it's kind of a hedge in a way. However, the second reason is different. Positive economic data from the US has different impacts on each. So strong economic output from the US, PMIs, retail sales, advanced GDP, all coming out hotter than expected, and a hotter CPI than expected. You put those things together and you say, okay, that could create a higher demand for oil and a stronger USD. What does a stronger USD do to gold? It pushes it lower. It's not starting out well, but if I do need to re-enter or try again on this trade, I very well might. However, it's going to come down to what we hear from Jerome Powell later today. If we get, like I said, a more dovish Fed, we probably just fly high, right? And I'd stop out and I take a small loss. If, however, we get from Jerome Powell more of a cautionary tale, more of a, hey, we are still concerned about the risks of inflation resurfacing, gold very well could come right back into this range and perhaps even test the low limits of it. So that's kind of my thought process. And if we do get, again, I think the economic data overall still bodes well for strength in the oil world. I have caught this a couple times on the way up, so it's been nice. We've caught a couple winners, and I'm trying to catch another one. Let's see if it works. If it doesn't, I'll stop out below the lows, okay? So that's what we're looking at. How does the Edgefinder consider news like speech or other things like that? That's a good question, Flavio. It does not consider speech at this time. However, we are working. This is kind of the upper limits of what our abilities are currently. However, we're thinking about and working through the idea of creating a text reading software that could potentially read FOMC statements and generate a bullish or bearish bias based on them right away. It's pretty low key, and it's kind of a high promise, and I'm not saying that that's coming anytime soon to the Edgefinder. It is a bigger project, but it's something that we have discussed. So Tim says we are building an AI. Yeah, someday the Edge Finder will make pancakes for you in the morning, and in the afternoon it will create a grilled cheese for you. So no, I'm just kidding. Well, maybe that would be cool. It would be a cool feature. Anyways, the NASDAQ still under this support, which I thought was really interesting. And again, it kind of makes sense. You had some big players report, again, confusing at first. Microsoft and Google, two huge players in the NASDAQ, reported better than expected earnings. Google shot down hard. Microsoft is like flat. So why? If earnings were so good, they beat expectations. Both of these companies beat on the top and bottom lines. So why isn't the NASDAQ up? It's because they're already priced to be incredibly outperforming the market, right? And beating expectations. The issue for Google was that I think there was some YouTube outlook that was kind of bleak, and that the holiday season was a little bit disappointing in terms of YouTube numbers. So it's like the smallest little thing that these companies miss, and they get sold off hard because they're so, the whole team's on their back, right? Google, Microsoft, Amazon. I mean, they led the charge for the NASDAQ, and for, the NASDAQ rally last year was NVIDIA, Meta, Google, Amazon, and most other companies did not nearly participate until the end of the year. If you watch the S&P 500 last year, for most of the year, it was kind of down in the dumps and not really doing all that much until the end of the year, where it just ran hard, right? Tech stocks led the way last year. And the only issue that I see with them, and the concern that I have a little bit with tech stocks, if I'm being transparent about it, they're priced for perfection, as they call it. They're priced to be perfect. They're priced to never have a hiccup, to have incredible earnings all the time. See what I'm saying? So that is what we saw. In a moment, we're going to bring on Frank. We'll discuss a little bit of what we saw this morning from ADP, and as well as just kind of a general outline for today. We're going to keep it brief here today because we do have a big stream happening later this afternoon or evening for some of you guys with the Jerome Powell. We will be live for that. Let me just real quick invite you to do something for your own convenience. If you know in your head, you're like, I want to be back on the show later. Number one, hit the subscribe button. Number two, hit the little bell icon next to that's the worst. Just ignore me. That's the worst bell you ever saw. Anyways, click the bell, right? If you click the bell, it'll notify you when we go live later on today. We'll have several guests. We got Chris Pulver, a former money manager who's coming on the show. It should be really, really great. So really excited for it, looking forward to it. And we're going to bring on Frank here in just a moment. So stick around. We're going to thank our sponsors. Come right back after this to discuss what's going on. Check this out.
Attention A1 Trading Show fans. If you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partnered broker Eightcap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to Eightcap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now, back to the A1 Trading Show.
What's up, Frank? How's it going, man?
Doing well. How are you?
Pretty good. Hey, so what do you want to talk about? There's a lot to talk about.
Yeah. Let's just start with today's news. Mm-hmm. We have ADP, CAD, GDP. I just wanted to cover those two and see where I'm at with oil and gold and markets, dollar as well. So ADP came in lower. That's it's not a good sign for the economy, but ADP doesn't really send an accurate message, in my opinion. It always sends something different from actual NFP. Mm-hmm. So we can see, even though that it's lower than both previous and forecasted of this month, that it could come in way hotter on Friday. So I'm not too pressed about that.
Yeah.
But on the other side, we have Canada GDP growth came in hotter, which is honestly a good sign for me because I'm still bullish oil. So I'm trying to look at a retest in the 78 or 79 zone for oil's price. Also, yesterday's rejection off the lows, it came down to support, bounced up, closed higher. Today is maybe doing the same thing, but I think higher GDP in Canada is a good sign for oil because of the oil market and Canada's economy are very closely knit. So I like oil here.
Yeah, and anytime you get a stronger GDP print, whether it be Canada, US, Europe, that's generally speaking just better for oil because it makes sense, right? It's like more growing economies demand more oil. So kind of an interesting thing to think about. I'm still in my oil trade, Frank. I'm hanging on for dear life. I barely escaped this stop out point right here, and price just came back. I'm still sitting at break even, but should be interesting to see how that plays out. I don't know if you heard me talking a little bit about it earlier, Frank, but we were talking about this on the way out of the office yesterday. The NASDAQ was selling off here on Google and Microsoft. What do you think about the NASDAQ? I mean, do you think it's at a pullback point as is? Do you think it has more room to come down? Especially considering Jerome Powell later, we have our bias and we've been clear about it. So we'll see if we're right about it. Whether or not they're going to talk down the idea of March rate cuts is yet to see. But what do you think about the NASDAQ?
I do think it's overextended. Today's open was also concerning. I'm looking at the daily time frame, looking at support on this trend line. If that breaks, I think this marker might be March 22 highs. I can't remember, but this was a significant marker.
Mm-hmm.
So somewhere down here, if it comes lower, but yeah, I think NAS is probably a sell for now.
Yep. Yeah. No, I think the NASDAQ has room to come down personally, and we'll see again. and also to say that a market is overextended, we need to also be clear that Frank and neither of us are actually bearish on stocks. Like we like the indices, but there is a point where it's okay to say, hey, you know what? This thing may have made its move. It may be a bit overextended. There's a bit of a head and shoulders. It's an ugly one, but there might be a little bit of a bigger pullback coming here. And if we do hear from Jerome Powell today that, this economic data is coming in strong and we don't see a need to rate cut at this time, if you get that, you're probably going to, price out. You're going to probably spook some of the traders who were just kind of the rate hike hype people. So I'm sorry, rate cut hype people. That's kind of a hard one to say, but it should be interesting to see. Frank, I don't want to keep you too long because tomorrow or later on we have a much longer stream that we'll be hanging out for.
I do have one more thought though.
Yeah, what do you got?
If Powell says that same thing, it's probably not good for gold either. Mm-hmm. But I'm also still looking at gold to the long side because of its break in that wedge pattern. It closed above yesterday, and today is higher. So I'm watching gold too, and I am hoping for higher levels. But I got trailed out at break even, so I'm glad I didn't lose any money on the trade, but I still kind of wish I was in it. So I might be looking for another entry on that.
Okay, fair enough. Well, thanks, Frank. And again, we'll be back later to do the FOMC stuff and hang out with everybody. So it should be fun.
Okay, sounds good.
All right. See you, Frank. Cool. Awesome. Yeah, good. Always good to get to Frank's thought ahead of time. We both are kind of in the idea, the camp of, March rate cuts. Might have been a little bit excited. And if that truly gets ruled out today, what I expect is that the NASDAQ will come down harder. Now, I'm saying that with a big, asterisk next to it. Okay. If Jerome Powell comes out, there's your super asterisk. Okay. If Jerome Powell comes out and he actually says that while the economy is looking strong, we still see meaningful, cooling in inflation. And, we may be looking at rate cuts, as soon as March. You won't say it that way, but you get my point. If the market sniffs out that March rate cuts actually are coming, I will be very much a different person tomorrow. Okay. Because if we do get March rate cuts, then I have to bite my tongue and I have to look to get long gold, right? I have to look to get long gold. I have to look to, and of course I'm saying that in a calculated way. I've got to find setups, but likely it would change my tone a little bit. And so I'm being flexible today. I have my bias, I have my opinion, and I have my game plan going into the event. I've been, as clear as I can about it on my channel. However, if I'm wrong or something changes, I have to accept when I'm wrong and move on from it. So we'll see what happens there. But so far, we are getting some sell-off in the NASDAQ. It'll be interesting to see if it continues to move. I'm the fundamental king. Don't sell NAS. Fundamental king. That's a cool name. I think if you're speaking about fundamentally the NASDAQ, I love it long overall. However, if you understand price to earnings, historically speaking, the NASDAQ is very, very richly valued and probably due for a pullback. I think that's okay to say. I'm still bullish on it, but I think if you look at the price to earnings of NASDAQ on average, it is very, very high compared to itself historically. So remember that there's the price action. When it comes to indices, there's price action, but there's also price to earnings, price relative to how much money these companies actually make. And it's very, very high right now. Okay, something to think about. S&P also still struggling here, can't seem to hold support, and noticeably so. We can actually see that intraday broke under, wicked back up, fell back down. Maybe the S&P is due for a little bit of a pullback as well. So should be interesting. Does the Edge Finder implement geopolitical news? If not, where do you get the info? Great question. It does not yet. We have some intentions in the future to add some geopolitical indicators. I think that would be very, very cool. So if you do have the Edge Finder, you'll get that for free when it updates. We have lots of features coming out, many, many features coming out. I want to show you guys one that we worked really hard on recently. So we're currently, this week is Labor Statistics Central, right? Added some cool data here. You can actually now look at unemployment claims. Check this out. This will take a second to load because it's a bit of an aggressive data. There it is. So unemployment claims, we just added the historical chart here. And I love having this data here in one spot. So if we're looking at unemployment claims, you can see that claims for unemployment have been overall trending lower. We ticked higher on the latest filing, and we'll get more claims data this Thursday. At the same time, we also have JOLTS job openings. You guys might have remembered from yesterday's stream that we watched the JOLTS number come out. These are job openings. We saw a tick higher, right? It's a little bit of strength in the labor market, just slightly, but worth mentioning. You can pull up this data on your own. If you have an Edge Finder copy, check out the new features. We're adding more and more to it each day. And pretty soon we will have economic data for all your favorite stats and tricks and all sorts of fun things. Okay. We're adding a lot of stuff here, and it's really quite exciting because I love being able to pull these charts up on the streams, in the content, and just to get a quick read at JOLTS job openings, right? So that data is now available. We don't quite have everything yet, but we will have PMIs, retail sales, GDP from one spot. This is, as far as I understand, there's like nothing out there that does this. One software application, you'll be able to look at all the data you want. And more importantly, you'll be able to get interpretations, algorithms that are generating ideas based on this data, all in one system. Let me just reiterate. I'm gonna close out with this. If you didn't already hear, we are doing 45% off the Edge Finder. That ends soon, and we are planning to restructure our pricing for the Edge Finder going forward. So this is a flash sale event that we're doing this week to give people a chance to pick up a copy before that price goes up. If you've been thinking about getting a copy of the Edge Finder, it is only going to get better and better. And this is some real life FOMO. I'm being genuinely transparent about this. if you sit on the sidelines and watch the price go up and watch us add 1 million features, it's not going to feel good. Get a copy because you get free updates. So when you buy a copy of the Edge Finder, it's a one-time purchase. And as we add all these amazing new features, as we will do for foreseeable future, we'll continue to add and improve the software. You get all of those things for free. You don't pay again. You pay once. You have access. But that price is going up. So do not miss the chance. Get 45% off if you send us a direct message using the link that's in the chat right now. You'll be connected to a real person on our staff. Again, don't let FOMO get you. This is a real world FOMO environment, okay? If you miss out, you actually will be missing out. There's a promise there. The price will be restructured and you'll be missing out on future free updates that you could have had for much cheaper. Got the software and it's a great tool. Thank you very much for the feedback. Appreciate it. And with that said, guys, thank you very much for tuning in to today's show. I hope you got some value out of it. And we'll be back later on for the big one. FOMC starts at 1:30 US Eastern. See you guys then.
All right, thanks again for watching today's show. Our goal at A1 Trading is to continue to bring you free value through our daily videos and articles, keeping you up to date with the latest market coverage. If you like our content, make sure to subscribe for more. And hey, I'm going to need you to get out of here. We got some heavy equipment on its way, and you're kind of in the way, so you need to move along. Frankie, that hard hat needs to be on your head.